Okay, so we're going to begin talking about the Sarbanes-Oxley Act and how it relates to nonprofit organizations, because really it doesn't. Um, it was created due to dramatic corporate and accounting scandals such as Enron, WorldCom, and Tyco. I'm sure everyone has heard of those and what has happened. The main focus of the Act is to enhance integrity of the audit process as well as reliability of audit reports. And as I said before, it doesn't really pertain to publicly traded companies, so it's mainly for, or not for, nonprofit organizations, I'm sorry. And the nonprofit organizations are not required to report the accounting controls to the Security Exchange Commission as the publicly traded companies are. And then there are some main goals of SOX, which is what also means Sarbanes-Oxley. And they are improving corporate financial reporting and internal controls, strengthen audit committees, change the relationship between auditor and client, improve auditor independence, provide additional auditor assurance over internal control, provide oversight and regulation for auditors of publicly traded companies. So it's mainly just to ensure that all the accounting controls are in order and everything is being fair, there's no fraud going on because of what had happened in the past. And it wasn't until 2002 that the Sarbanes-Oxley Act was passed, and it was set in place, like I said, to combat fraud and improve reliability of financial reporting and restore investor confidence. And it mainly applies to publicly traded companies once again, so nonprofits aren't required to abide by the act. Most nonprofit organizations can't afford to pay an outside audit company, so they create departments such as the finance department or audit department, and those have been established to basically do the same thing that an outside auditing company would do to ensure all the financial records are true and in order. And of course, the department shouldn't be of no conflict of interest, so they should be made up of board members who are not compensated for their service, so basically they're just volunteers, and members who are in no way financially related to the business, because then that's where problems could come to surface. And the department members should also be changed every 5 years or so, just to ensure that everything is continuing as it should. So in regards to nonprofits and Sarbanes-Oxley Act, since nonprofits aren't required to abide by the SOX Act, but they are subject to due diligence and prudent management. And there's no clear guidelines on how the financials and audits should be handled by nonprofits. So there's just a couple cookie cutter requirements that they should follow, such as having an ethics statement and conflict of interest policy, which is like I said earlier, they shouldn't have board members who are financially related to the company in any way, and establish committees to do auditing and ensure all financials are in order, an education policy, and then protect whistleblowers, which are employees who come forward and report fraud within the workplace, and they will have no retaliation from the employer or anything in return for bringing fraud to the attention. And then a document retention policy, which is just a policy for how long every document should be kept. Like, for example, if a name change document should be kept for 5 years or an address change only for 2 years. And that's just to ensure that when an outside auditor comes in, everything is in place and they're covered for everything. And then continued. The main costs of SOX that is already created, a costly amount of paperwork and bureaucracy, and the estimates of costs range from millions of dollars per firm to billions of dollars for explicit costs, and the accounting and legal costs are high as well. So virtually every audit company around the country is watching their audit fees escalate by going up as much as 50 to 100%. And nonprofits create committees such as the finance committee, audit, investor committees, etc., which means that they need to hire people for those committees, and then in return creates another cost because, of course, they need to pay them for their work and positions. And there is a few benefits of having SOX within nonprofit companies. All companies, businesses, organizations will have the same rules and regulations, so there would be no question as to whether it's unfair or anything like that. Nonprofits are just as much at risk as any other company, which every company is at risk for fraud. And like I said earlier, the whistleblowers would be protected from the backlash and retaliation of their employer. And there's a control environment. So organizations and business entities with strong governance provide discipline and structure, instill ethical values within employees, and exhibit behavior that the rest of the organization will want to evaluate. And it forms internal controls, which are obviously very important. And with the pros comes the cons. So some companies just never saw the need for internal controls, and they have yet to implement them in their business. And some of the reasoning for that could be that audit committees just have not insisted that their companies go beyond protecting assets and reputation, so they're taking a huge risk with not having any type of auditing done. CEOs haven't developed sufficient resources to handle the burden. CFOs, chief finance officers, haven't been ingenious enough at devising ways that SOX can contribute, so they haven't really looked into it, it seems, to see how beneficial it could be. And the CEOs, CFOs, and internal audit departments haven't collaborated to identify areas where gains in value could be used to offset costs of compliance. So they're not actually taking the time to look at all their financial documents and see if anything's wrong or if anything can be fixed with it. So basically, SOX would be very efficient within nonprofit organizations, because with any business entity, they will have to adhere to the same rules and regulations, and obviously this act has helped stop more scandals, I'm sure. The nonprofits will have better structure as well as internal controls, so once again, mainly preventing the chance of fraud. And it's just very costly to have an outside audit company, so really it would just be beneficial for the nonprofit organizations to whether have an outside audit company or, like I said before, just create their own departments for it, but then have no conflict of interest of anyone who's financially related or intertwined with the company to have any access to that, because then that's how things like the scandals happen. And that is everything. Thank you.